Good evening, everybody, and welcome to another live stream by the Option School, where we talk about option trading strategies, option trading adjustments. And today, it's a very, you can say maybe the first time we are doing it on a public channel. That okay, what are the three types of option trading setups? Now, whether these three kind of option trading setups suit my own trading style or not, and we will see that okay, so many times as a trader we are doing certain kind of a trading setup combinations which do not suit at all the kind of trading style we have, right? So I will try to just briefly go through the topic, and hopefully you will find it very interesting, and hopefully it will change the way you are using some of the strategies and some of the underlyings also. Maybe if you are using too much of stocks, you will start using maybe a little bit more of Nifty, or a little bit more of Banknifty. Or if you're using more of weekly options, you may use monthly. Or if you're using more of monthly, you may start using weekly options. So this kind of a discussion will definitely have a very positive impact on your overall uh, trading style. Let us go through that, and hopefully all of you today enjoyed the kind of expiry, because expiry was not that volatile. Although yes, right in the beginning there was a decent gap up, and but the good point is that markets almost maintained that gap up, and in the end what we saw that okay, ultimately markets expiring at a higher level, right? So if you see, we opened up gap up almost by 108 points, which was from yesterday's closing. And since all the Asian markets were up only, so we also opened gap up, and that is what we discussed in our morning video also, right? So 14,798. After that, we did went to 14,883, which was in the fag end of the day. Otherwise, we were very well close to 14,720, 30, 40 levels almost for the whole day. We were at these levels only, right? So very stable day, almost I can say up to 130. After that, market gave a big move on the upside, and on the lower side it went up to 14,692. On the upside 14,883, and closing at 14,867. So ultimately, if you see, the last move of the market was on the higher side, right? So if you see high and low, roughly close to 180 points on an expiry day is not bad at all, right? 180 days is 180 points is fairly good. But see, this 180 points, when market has given a gap up of 110 points, the difference between high and low is 180 points when market has given a gap of 110 points. So that's what we discussed in the morning video, that okay, uh, we need to take care of these gap ups and gap downs, and after the gap down are taken care, the other moves are not so bad during the market as you don't find that okay, market moving with lot of speed. It's only maybe last half an hour or 1 hour it starts showing little bit of directional wild move. Otherwise, markets for the whole day generally remain pretty much okay if there is no big event or big news flow, right? So hopefully all of you had a very safe and profitable expiry, because there were no not much of a you can say surprise or shock element. Only thing, yes, from the levels, what were expected from the data, that okay, 14,800, 820, 30 should have been a much better expiry, but in the end market just pushed itself up by 25 to 30 points. That's the whole shock element in the total expiry today. Otherwise, it was very well within the range. And if you have seen our morning video, let me show you one thing. Okay, here you can play it also, not now, but maybe you can see pre-market analysis on our channel, where we marked 2 points that okay, 14,670 and 14,878 should be the levels within which chances are that market will remain within these two levels. 14,670 was also marked, and you can see at these times these words were said by me that okay, most probably market will settle down between 14,670 and 14,878. So that is what we have seen: 14,878 making a high of 14,883, making a low of 14,692. Sometimes even I'm surprised that okay, how come we are able to reach these levels. We are doing these level calculations from so many, you can say, years, and but even I was not following these levels because I was these levels were with us only. We were not giving it on a YouTube or Twitter or anywhere. Now since the days we have started giving up pre-market analysis, even we are noting down these levels very seriously, and what we are finding is that okay, the levels have a strong accuracy, and the way the markets behave, they work really wonder. Thanks Rajiv ji for you see, pinpointing these things. Rajiv ji is always writing us that okay, this is the level which was given, and this is the level from where market has turned. So thanks, Mr. Rajiv Agarwal, for your uh, support and for pinpointing that okay, your levels are working. So even we were not very serious with the kind of levels we were calculating, but now we are seeing that okay, whatever levels we are calculating, unless and until there is some big wild shock in the markets because of some news or because of some event, these levels work really well, right? Hopefully all of you must have taken benefit of these levels, and if not, you can definitely from Monday morning start you can do a sort of a back testing also, that okay, what kind of levels we discuss at 8:30 in the morning and how the markets behave during the day, right? We have been doing this from last almost 10 to 15 days, so you can go back to the channel and check these levels, right? So that is where you can find out how these levels are working, right? So hopefully all the trades were very well in control for all of you in today's session. If anybody has any issues, please let us know, and we will try to do something for that trades. Now we have a 3 days holiday. Now this kind of a 3 days holiday is much better than the previous holiday, because Friday is a global holiday. It's not a local holiday. It's not a holiday only in India. It's a holiday all over the world. So Friday, Saturday, Sunday, 3 days holiday. So we may not expect much of fireworks on Monday. It will be a normal Monday, right? So if normal Monday is volatile, it can be volatile, but there is no such risk that okay, for one day we are not trading, but global markets are moving, and so we have double movement or double shock for Monday. So these kind of holidays are always handled much more easily compared to local holidays, right? All of you who are new to channel, please go ahead and click on the subscribe button, and while clicking on the subscribe button, do not forget to click on the bell icon also, so that you get a notification whenever we are doing a video. We are doing a pre-market report, pre-market analysis at 8:30 a.m. in the morning, and we are discussing some strategic points at 9 p.m. in the evening on most of the working days, right? And all of you who are already part of our uh, family, you know which button to click to keep us encouraged for coming every day and eating your head for almost 30-35 minutes. Please click on the like button. What Mr. Rajiv is saying, I'm seriously following your pre-market levels for creating new trades as well as closing existing trades. Thanks for the effort. So nice of you, Mr. Rajiv ji. Mr. Ganesh ji saying, what is Sunny Sir's channel 3? You can see in the video one day we had done a very long session of 2-3 hours during market timing, where Mr. Sunny taught us about his channel theory by showing many examples. Many of you asked him some questions, and he very kindly has given channels for most of the stocks, whatever viewers asked that time, right? So you can just scroll through the channel, maybe few days back that video must be there. I will add that video's link in the description also, Mr. Ganesh, right? Now another thing is that okay, markets are really volatile. If you see last 4-5 days, every day there is a movement of at least 200 points, right? In these kind of markets, what I found, even many experienced traders have lost good amount of money. And if you are even not an experienced trader, but still you are making some money, what is happening is over trading is killing the trades. I know one of my very close friends who is a good expert in option strategies. Even he lost money because of over trading. Now this is one thing which we need to control, especially in these kind of volatile markets, which are on day-to-day basis giving big wild swings in both the directions. Right? You really do not know what will happen next day. And if market has gone down, you have sold some calls. Next day market goes up with double the speed, and all those calls get killed. and if market you feel that market is coming down and you buy some puts, next day market goes up and kill all those put buyers. Similarly in the reverse direction also. So whether you are bearish or bullish, whatever trades you take, what happens is because of wild swings in the market, most of the trades are getting killed, and this is giving uh, quite a heavy loss to many of the traders. So let us try to see what kind of setups we are doing in options, and in what kind of expiries, and in what kind of underlyings, and whether we are spending that kind of a time with the market, whether we have that kind of strength of a trader that okay, we want to do this. So obviously ultimately everybody wants to make a lot of money from the markets, but everybody wants to make a lot of money in a very short span of time. That is the biggest killer. So let me explain you what I'm trying to say. So three types of option trading setups are there, and many of you must be knowing that. So I have classified them into a very different category. One is fast setups. I'll show you what do you mean by fast setups. The second is second kind of setups are medium setups, and third kind of setups are slow setups. It's not that okay, slow setups are bad or fast setups are bad, but then obviously all three are different tools, and all three require a very different kind of execution from the trader's point of view, right? So what are fast setups, what are medium setups, what are slow setups? Let us try to understand one by one. Now first is fast setups. Okay, can you just write it in the chat window, what do you think fast setups would mean? The name is very very clear. So what we are using is, we are using a word setup. Maybe a similar word can be a fast strategy, right? Any setup where profits and losses are pretty fast with market movements, right? These are known as fast setups. So any setups where you see if market moves by 100 points, and the profit or the loss in the setup is pretty fast and it happens very quickly, these are known as fast setups. Now these fast setups, I will give you example also what kind of these setups are there. These setups need complete involvement. You need to be very very good in execution, and you must be a very quick thinker. Only then these setups work for you. Otherwise it's by just stroke of luck that okay, sometimes this setup work for you, and most of the times this setup will not work for you. So these are the complete involvement kinds of setups. And what kind of these setups are there, I will show you. And now it becomes very important that okay, what kind of underlying you have chosen. If the same setup you are doing in Nifty, it will be, again it will be fast, but the same setup if you are doing in Bank Nifty, it will become double fast. So the choice of underlying is also important. If you are doing it in a very defensive stock which doesn't move very fast, it the fast setup also can still be handled. But a fast setup in a fast volatile underlying becomes extremely you can say profit making, or extremely loss making also. It is equally dangerous as well as rewarding. But then most of the times, because of the nature of these underlyings, nature of these setups, it is more damaging than rewarding. And you, all of you can analyze okay, what kind of trades you have done and which kind of underlyings you have used. Based on that you can just analyze that okay, in these kind of setups most of the time we tend to lose money, and they become much more faster when expiry is also nearer. Because in index, in Nifty, Bank Nifty, we have weekly expiries. Now first thing is my setup is very fast. Second thing is the underlying is also volatile, and third thing is the expiry is also near. So the most lethal combination I can think of is trading these kind of setups in Bank Nifty for a weekly expiry, or trading these kind of setups in Bank Nifty on an expiry day. So they become the fastest kind of setups, and you need to be glued to the screen. You cannot just even move even for a bio break, right? These are such kind of setups which can really quickly give you loss or profit within no time, right? So what kind of setups are these? Like if you are doing some naked trades, you are buying some calls, you are selling some naked calls, you're buying some puts, you're selling some naked puts. and in these kind of setups they can really give you quick profit or quick loss also, right? Even I will say short strangles or long strangles are fast setups, and they can give you profits and losses in these kind of markets when markets are very volatile. So your profits and losses can be extremely fast, even in straddles, whether you're having a short straddle or a long straddle. Or many of the traders definitely use futures in their trading systems. So when you buy a future or when you sell a future, the kind of speed with which market moves up and down, they can be very rewarding, or they can be highly loss making also. Now if you want to, you see, as I said, it's a human nature, all of us want some quick money from the market. But then, are we that fast in execution? Are we that fast in thinking? Are we that fast in adjusting the trade? If we qualify all these things, then are we uh, totally committed to the screen only? Then, only then, and only then we need to engage in these kind of setups. Otherwise they are very damaging setups. You can analyze your own trades for last 3 months, 4 months, 6 months. What I found that most of the retail traders lose money in these kind of setups. So what we see that, okay, the amount of premium available in Banknifty is so good, and even on last day the amount of premium available is so high. Let me do some trades, and even and within a day I will be able to extract some 5-6% from the market. Most of the times it doesn't happen, and most of the times what happen is we keep losing from these kind of trades, right? So these kind of setups may not be suitable to all the traders. These kind of setups may be suitable to people who are more into intraday technical analysis kind of things, so that they can quickly reverse their trade, they can quickly put some stop losses, and they are able to book some losses also. If you are a strategic trader, and where you need time to think, where you need time to calculate, and you do not want to sort of a gamble with the markets, then these kind of setups do not suit you, and we must avoid these kind of setups with major chunk of money. Okay, if I am having, let's say 10 lakhs in my portfolio, I can definitely use 40-50,000 rupees for these kind of setups. But definitely I should not be using even 15 to 20% of my capital for these kind of setups, right? Second setups are, I'll say, medium setups. Now, again, we are talking about the kind of moves market gives, or the amount of days what we pass in the uh, trading strategy. So profit and loss is just okay with market movement. They are not very fast. It's not that, okay, market moves by 100 points and suddenly this trade is giving me a good profit, or any substantial loss. Yes, there will be losses, there will be profits in these kind of setups also, but they will be slow in, they will be medium in nature, they will not be very fast. So most of the times these setups are very well hedged, and hence need a good trading plan. So in this case, it's not your speed of execution. It's not that, okay, how quickly you're able to put a stop loss or reverse the trade with the changing direction of the market. Here it's how good is your trading plan, and whether you're following that trading plan with discipline or not. That is the most important component in these kind of setups, right? Here I should not break the discipline of the trade, and I should not break the plan of the trade. Suppose I'm doing an iron condor. Now iron condor is a kind of a medium setup. On one side I'm making a profit, on one of the legs I'm making a loss. It should not happen that, okay, profitable side I have closed, and now it's the remaining side is not an iron condor, is something else, and then it can be damaging also. From a medium setup I'm converting it into something odd, which is a fast setup, right? Unless and until all the four legs of iron condor are there, that setup will not qualify for a medium setup. That will become something else. So here discipline is the key. I need to follow the rules of the complete setup of all the legs of the setup. So no need to be glued to the screen at all. You can do it at whatever adjustment points are there. Execution can be pretty normal. It's not that, okay, you need some super special skills to execute these kind of trades. And even if you have executed the trade after half an hour of you are done your adjustment, maybe 2-3 hours late than required, then also the damages are not heavy, right? So these kind of setups can be easily handled, even if you're able to see the markets, let us say maybe twice or thrice, or maybe after every 1 hour, after every 90 minutes also. So the trade will not go out of control just because you are not able to take some quick action in 5 seconds, right? So these are medium setups, and these are slightly longer term setups. And even volatile underlyings can also be handled well. So not only that you can do it in Nifty, even in Bank Nifty it can be handled well, because in this case your risk is very much defined, and if you do it properly, your maximum risk can always be much less compared to the kind of profit you can make. So even volatile underlyings, which are some stocks, which can be a banking stock, which can be uh, a Bank Nifty also, can also be handled in these medium setups with good results. Only thing is, we should not make a medium setup, we should not convert a medium setup into a fast setup by choosing a very short term expiry. So many times people ask me that, okay, can I do it in weekly expiries? Can I do it on the expiry day? Now, once we have changed the holy grail of the setup, which is a medium setup, which means it requires 15, 20, 30 days, we are changing the setup and making it into a Bank Nifty on an expiry day, that do not remain a medium setup, and the nature of the setup totally changes. So that again kills the trade. So expiry should not be very short. It should not be played for weekly expiries. We need to give maybe 30 days, sometimes more than 30 days for these kind of setups. And what are the strategies that work for these kind of setups? Like our passive income strategy, which is combo 2, that works fantastically well in these kind of setups. Iron condors or condors work really well in these kind of setups. These setups give you a lot of time to make some adjustments. They give you a lot of time to think, and they do not want that, okay, you act based on 1 minute or 5 minute or 15-minute candles, and as soon market make green and red candles, you need to panic. No need of doing that. And all kinds of spread trades like bull call spread, bear put spread, or any combinations, reverse iron condors, they form part of these kind of medium setups, right? So when you are trading, again, I will prefer that, okay, at least 30 to 40% of my portfolio allocation can always be towards medium setups, because they give me decent profits over a period of 15-20 days. And even if the trades are not working in my favor, then also the risk of losing money is not much in these kind of setups. So that is why a major contribution of your portfolio can be definitely given to these medium setups, right? Hope all of you have understood what exactly we are meaning by medium setups. So they do not create panic in you. They do not uh, make you sweat even if there is a gap up of 100 or 200 points in the market. But yes, you may require to do some kind of adjustments. After that, what comes, these are known as slow setups, and by any chance these are not the worst setups. I will say in these kind of markets, these are the best setups. So people who are members of our smart hedge or super smart hedge, you may be knowing that, okay, in last so many days we have not adjusted even any trade. After so many days, markets have, if you see last 5 days, 200 points down, 200 points down, then 200 points plus, 300 points plus, then 100 to 200 points down, and today 200 points up. This is the broad stats of the market from last 6 days. In last 6 days, we have not adjusted any of our trades, because we had combination of slow, fast, and medium setups. Even the fast setup was created in such a way that, okay, it behaved like a slow setup, because the kind of expiry we chose was making it a slow setup. Now, in slow, and today is the first day when we have traded after so many days, that may add to some frustration. But again, I will say, option trading, we are not here to keep ourselves busy, we are not here to entertain ourselves, we are trading to make some money for ourselves, right? It's not an entertainment tool that, okay, I'm feeling bored, so let me sell some calls, let me sell some puts, and let us have some kind of adventure in the market. No. So here you need to be very strategic, and accordingly you should act based on what kind of setup we have chosen. So third is slow setup, which works fantastically well in most of the conditions, and especially in the conditions what we are going through right now, where the markets are making moves uh, like a drunken elephant in any direction. and it's not for one day. It is happening consistently for many days, that okay, without any rhyme and reason, without any much of logic, you will make a big gap up, you will make a big gap down, and then you can move in the same direction, or you can erase all those gap ups and you can move in the backward direction. Now, these kind of to and fro movements, whipsaw movements of the market can kill most of the trades if we have done any kind of casual trading. And I know many experienced traders doing this, and even today I have seen a live example of this. Right now, profits and losses are slow with market movements, but that doesn't mean that profits are less. Even they are slow, but definitely when the trade works for you, the profits these kind of trades will give you are excellent, and they are second to none of the trades, right? And losses can be very minimal. So risk reward in these kind of trades are excellent. So again, hedged, and hence you need a good trading plan. Discipline is the key. Need to follow the rules. If you break the rules, these setups will change from slow setup to a fast setup or to a medium setup, and then everything goes haywire. No need to be glued to the screen. Now these setups are very stress free, as any gap ups, any gap downs do not affect the trade. So ultimately, in the morning, when you see that okay, what is the market at 9:15, market at 9:15 is 200 points down, no worries. We are not facing any m2m pressures. There is nothing red on the screen. So these setups take care of these kind of gap ups and gap downs. So these setups, I always say, these are vacation setups, or these are peace of mind setups, right? That okay, whatever happens to the market, I have a lot of peace of mind. I know I'm not running any risk. Even if there is a 400, 500, 600 points kind of a move in the market, my risk is so little, and that I need not worry. And even if I do not act, then also my loss will not increase. And there is a very good chance that in whipsaw kind of market come to these levels and again start giving me profits. Right. So these are excellent setups. Now, slow setup in a slow underlying can be slightly disappointing because it will give you profit at a later stage. Now, these slow setups, if you create in volatile fast underlyings, it can give excellent results. Only thing is you need to do little bit of adjustment, little bit of tweaking in the whole setup, and that makes it a excellent setup, although a slow setup. But when you use a fast volatile underlying, that's the slowness is slightly removed, and you start making good profits uh, even in shorter number of periods without taking any risk. What do I mean? Now, if I do a slow setup in a slow underlying, let us say we call Nifty as a slow underlying, so it will give me start giving me profits maybe 20 days after I have created the setup, right? But if I do this kind of a setup in Bank Nifty, which is a volatile underlying, this kind of setup in Bank Nifty can start giving me results just even in 5 to 6 days from the day I have created the setup. So what happens is when you are changing the underlying and you're changing the expiry, a slow setup can also be a very rewarding setup, right? So what can anybody suggest me what can be this slow setup? Any strategies which you feel can be part of these slow setups? Many of you are experienced traders, and I know many of you may not be understanding much of whatever I am taking, because if you are totally new to the markets, totally new to options trading, whatever I'm talking is can be a big bouncer to you. But if you are experienced option trader, you must be realizing what is happening to your trades. Many of times you are trying to create a slow setup, but because some tweaks you are doing, it is becoming a very fast trade to handle. Can you name what kind of strategies can be this? Uh, Yearly covered call, it will be, yes, I can say that is also that also qualifies for this kind of a slow setup. There is a slow setup but very rewarding setup. But if I want to know some monthly setup, and in these also, yes, slightly longer expiries are always better. So expiry can be 40 days, 35 days, 30 days kind of trades are very good in these kind of setups. Yes, Mr. Praveen says perfect. So butterflies and iron butterflies, are slow setups, but once you do these butterflies or iron butterflies or put butterflies, call butterflies with some small extra combinations in, let us say, a volatile underlying like bank nifty, then the slow setup is also a very rewarding setup, right? Only thing is we need to know this is an excellent tool. Even a gap up gap down of 500 points, 1000 points doesn't affect you much. But yes, if things remain within that range, you these can be extremely profitable. And I also discovered this, maybe you can say, 4 to 5 months back only, and now I'm continuously doing these setups. These setups are working excellently well. So iron butterflies with little bit of tweaking in the strategy are making excellent setups. You require roughly around 1.4 1.5 lakhs, and in that 1.4 1.5 lakhs, there are months where you are able to extract even 25,000 rupees also. So the kind of returns it is giving is too good, and even in volatile markets. So what we have seen from last September onwards, September, October, November, December, January, February, March, all these 7 8 months, markets were extremely volatile, right? Markets were extremely volatile, but even in these kind of environments, these setups are working very well, because what we are able to do is we are able to combine a slow setup with a volatile underlying. So it has removed the slowness also, it has removed the risk also, because the setup is such a wide setup that okay, it covers a huge range of the market. Secondly, because it is done in bank nifty, because the decay in bank nifty is very high, so it doesn't remain a kind of setup that okay, where you need to really sit till last to make any profits. Even if you close the trade maybe 10 to 15 days from the day you are set up, you are still rewarded handsomely well, and many occasions you are rewarded almost 4 to 5% in 15 days only. So these kind of setups which are combining a fast underlying with a slow setup are really lethal combinations in these kind of markets, where the movements are highly unpredictable. The gap ups and gap downs are killing most of the trades, right? So this is something which is working really well for all of us. So we said, okay, maybe almost for the first time or the second time, we have created a workshop wherein we are explaining this setup to all our participants. So that workshop is on Bank Nifty butterflies. So Bank Nifty is fast, butterfly is slow. So we have combined a fast thing with a slow thing with excellent results, and we can do a back testing for any of the months. It works wonderfully well. Although yes, markets are markets, so there can be some very bad markets. But what we have done, even in very bad markets, the kind of adjustment, the kind of tweaking we have done to the trade, this has made the trade almost every time profitable. This workshop is going to happen on 4th of April, and then we have a 2 days workshop where obviously you will be learning about many fast setups, many medium setups, and many slow setups also. So in your portfolio, what you can have is you can have around 10% of portfolio allocated to fast setups, maybe 40% allocated to medium and slow setups, depending upon what kind of time you can give to the market. If you are somebody who is busy with your job or occupation, then I will say don't go for any fast setups. Go for maybe 50% slow setups and 30 to 40% medium setups. You need not trade in fast. You are not missing anything out if you are not trading in fast setups. But if you are somebody who is always glued to the screen and who can take action very fast, then you can again change the mix. Maybe you can have 15% of fast setups, you can have 40% of medium setups, and another 30 to 35% of slow setups, and keep some amount of cash in your account also. So depending upon what kind of trader you have, what kind of time you have, you can decide on the kind of setups you will be using. And all the setups can have different combination. A fast setup with a slow underlying is better than a fast setup with a fast underlying. Similarly, a slow setup with a fast underlying is better than a slow setup with a slow underlying, right? So these are various combinations, and speed, fast, slow, medium also is dependent upon whether you are using a monthly expiry, or whether you are using it on a weekly expiry, or whether you are using it on an expiry day of a weekly expiry, right? So anybody interested in these workshops, you can contact us at the number shown on the screen. I do join us on Twitter also, and thanks to many of you, we are able to discuss a lot of interesting things even during market hours on our Twitter handle. Anybody willing to join our workshops can contact us on these numbers, or you can write to us at info@theoptionschool.in. You can send a WhatsApp also to us for knowing any further details. What about likes? Okay, maybe the topic is not that simple. It's slightly deep. So many times what happens that okay, many of us start thinking that okay, I'm not getting anything out of this topic. But if you're experienced trader, if you have made money and lost money in the markets, I hope you will be realizing what nonsense I'm talking, right? So if you are understanding that, please go ahead and click on that like button. Share this video to somebody whom you think it will be useful, right? And write your comments, suggestions, feedback, questions in the comment section, and we will be more than happy to answer those questions. And that your questions always give us some ideas on which topics to take in the next session. And let me tell you, now we are uh, converging into slightly deeper topics, and obviously you cannot expect that okay, these topics are very entertaining topics, and you may not feel very entertained with these kind of topics if you start talking about deeper psychological topics like the topic which we have discussed today. But definitely if you analyze your trades and you just try to segregate that what I was trying to do in this trade, is it because of this I have made profit, or is it because of this I have made loss, then you will really understand the gravity of the situation in this topic, right? What Mr. Akshay is saying, percentage of like in the morning or more than evening. Obviously, Mr. Akshay, when something is given in the platter, you are getting some levels, so obviously people feel very happy and like the video. But in the evening, when I touch your thought buttons, I try to give some thought cells in the brain. Sometimes it becomes irritating and you don't feel like liking the video, right? So it all depends upon what level of understanding you are at, and accordingly you will so when ready-made material is available in the morning, that okay, this is the gap up we are expecting, this is the gap down we are expecting, and these are the levels. So obviously you feel very happy that which is a ready-made meal for you, right? It's a fast food world. But in the evening when we are trying to uh, ignite some of the thought processes, then sometimes it becomes difficult to understand and appreciate also, right? In the evening, we can safely assume 50% drop in attendance. That's okay. Today's topic was really an eye-opener to decide before getting the trade. Good. It's very important topic and necessary for money management. Also, yes. So again I will say, you see, again all of us are at different levels of our trading experience. Somebody is a totally newcomer, somebody has experienced some good or bad trades, and I say whenever you enter the markets, if you encounter some bad trades, that is good for your journey as a trader, because if you encounter very easy success right in the beginning, so I will say nothing fails like success. So then we stop thinking and we think that okay, this is the way the recency factor come into practice. And again I will say again that same book, Fooled by Randomness. Because of randomness we made profits, and we start thinking that okay, I'm very smart. So then there is no you can say effort to polish our skills. And options trading is such a ocean that okay, every day we need to upgrade our skills, we need to work on ourselves, right? So enjoy a long weekend. We have 3 days, and welcome to all of you who have already joined our workshop, which is on happening on Sunday. And enjoy your long weekend, and hopefully all your trades are safe, and see you all on Monday morning. We might conduct one session for Super Smart Hedge members if possible. If not possible, we might be coming up with a Super Smart Hedge video also, right? So wish you all a very good and healthy and enjoyable long weekend, and see you all on Monday morning with our pre-market analysis. Thanks for joining.